This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Futures trading involves high risk of loss.
Hello, in today's video we're going to take a look at using our futures daily key levels indicator for the Globex Asia overnight session levels as well as the London RTH session levels. We're also going to be utilizing our day trading GPS Ribbon V3.0 indicator, which is the multi-reset edition, which has different resets for indexes, US indexes, stocks, ETFs, futures, Forex, as well as various global markets. Okay, so in this particular session, we're looking at the Monday Asia session, which starts at 6 p.m. Eastern New York time. So right here, we have the start of the Globex Asia overnight session here at 6 p.m. We have our session reset turned on for 6 p.m. to reset the ribbon here, so we can get a fresh look at the ribbon starting at the Globex open. Now, with this particular indicator, what you're looking for is closes above or closes below any of the main key levels as far as your initial entry signal. And then for confirmation of our entry, we're going to need confirmation from the ribbon indicator. So the main key levels with this particular indicator are going to be the bull bear key price level, bull bear KPL, and then we also have R1 through R6 and S1 through S6. However, when you're starting a session, you want to go over to the right price axis, left click and hold, and then move the price axis with your mouse until we get a more granular view. Now, you're not taking any entries off of QL levels or midpoint levels. Those serve different purposes. So you're only looking for candle closes above main key levels. The main key levels, again, the bull bear key price level, the S1 through S6 below, and the R1 through R6 above. So as you can see here, to begin the session, we're getting sort of a chop grinding move here. We're not really going much of anywhere. And as you can see here, we're nowhere near a key level yet. We're in between, and we're only at midpoint and QL levels. So there's no possibility of an entry here. However, we do get a waterfall drop off here. And then on this 9:46 p.m. candle here, which we can go ahead and zoom in on, 9:46 p.m. candle here, we finally get a close below S1, which is the main key level, and that is our initial entry signal. However, we're not entering unless we have confirmation from the ribbon indicator. So confirmation from the ribbon indicator is on a bearish entry, an all red ribbon, which we have, and we have the lower bands of the all red ribbon pulling away. So that is our confirmation for this bearish entry. And then on this particular candle here, it closes at 30,039. So we're shorting at 30,038. Now, as far as stop losses, your tight stop loss on a bearish entry is going to be the QL level above the entry that you're basing the bearish trade on. In this case, QL above S1, 30,072. If you instead prefer to use the standard stop loss on a bearish entry off a main key level is going to be the first midpoint level above that particular level in question. So that would be mid BBKPL S1. In this case, for this session, 30,101. Now, what about target exits for either exiting your trade or adjusting your trade? So there's three different types with this particular indicator. Just really depends on your preference as far as what you want to consider your initial target for either 100% exit or starting to adjust your trade. So the quickest adjustment is going to be a one level move in your favor. That's going to be a regular scalp trade. One level move in your favor is calculated from the level that you're basing the trade on, in this case S1, and it's a bearish trade, so we're looking down. One full key level down is S2. So on the hit of S2, what you're doing at that point, if you're only trading one contract, is you're either going to exit 100% of your position here on a hit of the scalp move down one level in your favor, or you're going to adjust the stop loss to break even, what your executed price of the short was, or break even plus adding an additional profit buffer. Now, a third alternative would only come into play for trading multiple contracts. So, for example, if instead of one regular NQE mini, you were trading 10 micro NQs. So in the case, let's say, of 10 micro NQs, since you have 10 contracts, the third alternative is to exit 60 to 90% of your original position on this regular scalp move in your favor of one level. And then on the remaining runner contracts, then you're just adjusting your stop loss to break even, or break even plus additional profit buffer on those remaining runner contracts. So in the case of having 10 to start out with, 60% would be closing out 6, 70% closing out 7, 80% closing out 8, or 90% closing out 9. So what you're going to do is you're going to exit 60 to 90% of your original position, and then you're going to adjust your stop loss on the remaining runners. So by adjusting your stop loss on the remaining runners, you now de-risk them. Excuse me. And then you're putting yourself in a position where if the move continues in your favor, then at further key level moves in your favor, you're either exiting those runners or further adjusting those runners by adding on more profit buffer, and then eventually deciding at which key level move in your favor to exit some or all of the remaining runners. Now on this regular scalp move, one level move in our favor. So these figures on are either if you had 10 micros or one regular E-mini. One regular E-mini is $20 a point on Nasdaq. Micros are $2 a point. So if you have 10 micros, it's $20 a point. Or if you have one regular E-mini, it's $20 a point. 110.25 points here on the hit of S2 from 30,038. That is $2,205 in profit. So if you're exiting here, $2,205 of profit. If you're adjusting your stop loss, then of course, adjusting it to break even, as your profit's going to depend on where exactly you're going to get out if you're just doing that. If you're adding on additional profit buffer, then you would just decide what additional profit buffer that you want to add. Typically, what you want to do is, if you're going to add additional profit buffer, then you would put it somewhere up in this zone above the midpoint here once it hits S2. Of course, that is going to be up to each individual trader to decide for themselves their use of practice if they want to, how much of additional profit buffer they prefer to add. If you add on too much of additional profit buffer, especially on something volatile like NQ, you're running the risk of just getting stopped out if you add too much on. So if you're more inclined just to add a huge amount on, you might as well just exit 100%. Ideally, the best of both worlds is if you're trading multiple contracts. So if you're able to trade multiple E-minis, then if you're trading 3 and you sell 2, that's 66%. You're looking to exit the majority, 60 to 90%. So whether you're trading micros or E-minis, so it need to be something of 3 contracts or more. Now, there are two other different initial targets that you can use besides a regular scalp. A regular day trade requires a minimum 1.5 levels move in your favor. So 1.5 level move in your favor would, from S1 on a bearish entry would be mid S2, S3. So we have one level here. This is 1.5 levels here. This is going to be 29,812.50. So from 30,038, that's 225.50 points. So for one regular E-mini or 10 micros at $20 a point, for one regular E-mini or 10 micros at $2 a point times 10, that's still $20 a point. So either way, it's the same. $4,510 profit. So if you're going to use the 1.5 level move in your favor as your initial exit or adjustment, it's basically the same three different options that you have, either exiting 100% of your original position, or adjusting your stop loss to break even plus a additional profit buffer on top of break even, or if you're trading 3 or more contracts, whether they're micros or E-minis, selling 60 to 90%, exiting 60 to 90% of your original position, securing that profit, and just simply de-risking the remaining runners. The third level, as far as initial adjustment or exit, would be the minimum ideal move. The minimum ideal move on ES and NQ is going to be a 2-level move in your favor. 2-level move in your favor from S1 on a bearish entry is going to be S3. For this particular session, S3 is 29,697.25. From 30,038, that's 340.75 points, times $20 a point if it's just one regular E-mini, or $20 a point on 10 micros at $2 a point times 10 micros, same thing, $20, $6,815. Same thing here, adjust, either exit 100%, adjust stop loss to break even, or break even plus initial profit buffer. Or trading multiple contracts, 3 or more, selling 60 to 90%, exiting, securing the profit, then adjusting stop loss to break even, or break even plus a profit buffer on the remaining runners. Now keep in mind, whichever one of these that you're starting at as far as making your initial adjustment. If you're, for example, using the regular scalp 1-level move for your initial adjustment, and you're not exiting, then at each different key level move in your favor, that's when you're either, if you're staying in the trade, you're either exiting 100% if you just did an adjustment, and let's say you only had one contract, on any further key level moves. So on further key level moves past the initial threshold, whichever one you're picking, in this case, we're looking at the 1-level threshold move in your favor. After the minimum threshold move in your favor, then the midpoint levels, as well as the main key levels, are waypoints for decision making. So if you did an initial adjustment here, then when it hits here, this would be your next decision. And then the next decision comes here. If you had the regular day trade 1.5 level move, then your first additional decision would be here on this. And then if we get a further move down to say S3, S4 midpoint, which we don't have turned on currently, then that would be an additional waypoint there. Now typically a 2-level move in your favor is a good, that's why it's called the ideal move. So if you get a 2-level move in your favor, if you're going to still stay in any portion of your trade, then you want to really tighten up your stop loss on your de-risked runners. Because typically on most sessions, you're going to see at most a 2-level move in your favor on NQ and ES. That doesn't mean that it's going to be the full extent of the move. Of course, we've seen sessions where you're going to get 3-level, 4-level, 5-level, and 6-level moves in your favor. The point is that usually a 2-level move is going to be the full extent, so you'd want to tighten up and lighten up so that you're collecting, again, the majority of the profit, and you're putting yourself in a position where you're just looking for a further move in your favor, perhaps with a small minority of your original position, and then with a very tightened up stop loss. Okay, so now let's look at London session levels. So with this particular indicator, you can utilize it for Asia, London, or New York. Now, some of you may already be familiar with our other futures daily key levels indicator, which is also included if you purchase the futures daily key levels indicators. You actually get 2 indicators. So you're going to get this one, which has the levels for Asia, London, and New York. Then you also get our V3.0 indicator as well. Now, the V3.0 indicator has many additional features. So this is the newest version of this indicator. However, it's only for use on the New York RTH session only, and that's because we introduced many new features that are only going to be relevant to the New York RTH session, which is, of course, the most widely traded session out there. Now, we're not going to go into all these features today. We're just simply pointing out that when you do purchase the futures daily key levels indicator, that you get actually 2 indicators, the V3.0 indicator, which is the newest version, and that is just for use on New York RTH, and then you also get the V1.2, the previous version, which also has the New York levels. It doesn't but this indicator doesn't have all the other additional features. So if you're the type of trader that you like to trade the Asia session as well as the New York session, then you could simply use this V1.2 version for that. And then for the New York session, you should use the V3.0 version. So now let's take a look at the London levels. Now the London session levels come out at 1 a.m. Eastern. So they come out before the London session opens. Here, as you can see here, we have an all red ribbon, and we have a close below the London session bull bear KPL 29,917.75. And then we get a move down to S1. We get a retrace off of S1. However, we're never getting a all green ribbon here. As you can see, we just have a multicolored ribbon. Then we get a further move down to the 1.5 level for the London session mid S1, S2. And then finally we get a hit of the S2 level. So again, 2-level move, bull bear KPL for the London session down to S2. Then we get sort of a bounce above here, but then we get a move back down to S2. Okay, so if you're interested in purchasing the futures daily key levels indicator, then you can email us at daytradinggps@gmail.com to request a discount promo code. This futures daily key levels is sold in 2 different ways. Either you can buy the indicators by themselves, the indicators being the V3.0 futures daily key levels indicator and the futures V1.2 by themselves without the ribbon, or you can buy our future suite, which also includes the ribbon indicator as well. So in either case, whether you want to buy the suite or you just want to buy the indicators, daily key levels indicators by themselves, you can email us at daytradinggps@gmail.com to request a discount promo code. Thank you again for taking your time for watching today's video. We're going to end the video by showing you reviews and feedback we've received from traders who utilize our daily key levels indicators on a daily basis, so you can see what they say. Also, you can see the reviews and feedback by going to our WAP.com site where we market our indicators. That's WHOP.com, WAP.com/daytradinggps.
For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, these reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.